Hey everyone, welcome to Live Trading Thursday. My name is David. I'm going to be your host today. I'm coming to you from Oceanside, California today. Family night, getting down into the sunshine for the weekend. So excited about that, getting to enjoy some warmer weather than what we usually get up in Portland. But I'm happy to be with you guys here. We're going to take a look at the market, see what's been going on. Let me go ahead and share my screen. There you go. Guys, keep in mind that all the examples we're going to be looking at today in this live trading session should be viewed for educational purposes only and not taken as trading or investment advice. Guys, you know the drill. Go ahead and get those questions in the comment box. Both Facebook and YouTube should have that. Go ahead and get your tickers you want to look at, your stocks you want to look at, all of the above. Throw those in the comments so we can go ahead and take a look at that. All right, let's go ahead and look at the overall market here, see what we can see. You can see that this uptrend is still alive, this short-term uptrend here, but this steep support line has been broken, right? That got broken. We broke down below this support line actually, and then we moved up just a little bit. Part of me honestly was kind of thinking that we might have a little kiss goodbye action and then start to head down from there. But we popped up above it again, just kind of been going sideways since. So let's go ahead and let's get rid of this line. I want to throw a new support line in here that might make a little more sense now, right? This is part of trading, right? We put in support lines, resistance lines, and sometimes those get broken and we got to move them around and change things up. So check out this line right about there. I'll pull it out further. So from there, coming down, you hit those bottoms right there, and then really close right on that one. And then today wicked down and moved up off that line. That line looks like it could be a pretty good one for now. So a bounce today off the 20-day as well. Happened about a week ago, bounce off the 20-day. A few weeks before that, bounce off the 20-day as well. So what are we seeing? We're seeing a pattern that is, it's repeatable. Hopefully it's reliable. And so, we might be able to use that to trade. So I'm still thinking, guys, we could be cautiously bullish here, right? And what do I mean by that? Cautiously. How do you exactly define that in trading terms? Well, to me, that's really just going to be, I'm going to limit my position sizes, right? Why do I want to be cautiously bullish? Because we are not that far removed from this big downtrending resistance line, right? And is this bull run, is that for real? Or is this just, the big boys trying to sucker some retail traders in before they do some bear crash on them and get them to, just tank the market essentially. And, that's been done before. So we can move forward, but we just got to be careful, right? So smaller position sizes. So if something crazy like that happened, you know what? It really wasn't that much of our account that we were putting in the market anyway. Maybe be quicker to take profits, right? Because you don't want to lose those. That always hurts. And definitely always stick to your stop outs. So that's kind of a must. So that's kind of your overall market, just some highlights. But let's go ahead and jump in right here. All right, Marjorie, thanks for joining. So she's heard a lot about Disney going down. Okay, well, let's take a look at Disney, see what's going on there. I personally haven't been up on the news with what is going on with Disney. But actually, let me show you where you can find some stuff, right? So you've got Disney right here. If you go ahead and click the activity tab, it's going to show up kind of blank right now, right? And that's just because in this paper trading account, I haven't done any trades on Disney. But if you click the news right here, you can see all kinds of, articles or things written about Disney. So nice, quick way to get some up-to-date news on Disney there. I believe if you also go to dashboard, yep, and top right here, here's another way you can get to news as well. It's probably the same information there. Just a couple different ways that you can go look up some news on Disney if you wanted to. But let's go ahead and take a look at the Disney chart. There we go. So Disney also, you can see this downtrend, and this line could be pulled out farther even, something like that. That could be the full downtrending resistance line right there. Broke out nicely and then started to pull back more recently here. Earnings looks like it was good. Good earnings report on Disney. A lot of volatility in there. Started to pull back some, but where is it now? Get the 20-day, that's holding, right? Now, what do I mention with the overall S&P? Overall market, the 20 days also holding. So when you start to see stocks that are kind of mimicking certain aspects of the overall market, that's something to pay attention to, right? So, if they're kind of in line there, that could help with your trading. So if the overall market's starting to move up, maybe Disney starts to move up too. So here we have the 20-day holding, but it's been sitting on the 20-day for, this is about the 4th day now that we're there. So we're not really getting that nice bounce up off the 20-day. I wouldn't look at today, that little tiny doji candle. You almost have to zoom in to see it. It's so tiny. That guy, I wouldn't look at that today as a buy signal. Yesterday actually could have been a buy signal. Yesterday was a nice candle. And then today it's like, okay. But let's say we got in yesterday. Where would our stop out be? For me, it would probably be just below the previous wick right there. So that's where I would tend to want to put that stop out personally. So if you did get in yesterday, today's not a stop out day yet. It's just kind of holding, and we'll see where that candle finishes. It might stop out later on, or it might move up. So we'll have to see on that one. But that's a good one to bring up, Marjorie. Thanks for that. I guess one other thing I do want to bring up, we mentioned yesterday, or that yesterday's candle could be a buy signal, but I forgot to mention something else. This is really going to be if you have an established pattern already, right? I just like that candle bouncing up off the 20-day there. But where's the pattern? We don't have a great pattern established yet. We've broken this downtrending resistance line. We've moved up. It moved up a lot, right? There was almost a pattern in there of, bouncing up off the 10-day. Then that kind of got broken. And now we're kind of waiting for a new pattern. So that's really the first thing, right? Let's get back to the basics. First things first, we want to have pretty patterns. And then from there, if you get a bounce up off support, then you could be looking at a good entry. All right. Thanks again, Margie. Really appreciate that. Guys, throw those in there, so we'll take a look at them as they come. But as we're waiting, let me show you guys something. And I've shown this before, but we're going to do it again because it's that important. If you're thinking, where do I find tickers? You can come up here to the search box and you start throwing in companies you're thinking of, whatever. But they may not be in good patterns. They might not be in uptrends. You can use the platform, use the technology to aid you, to help you. There's over 10,000 tickers out there, but I don't want to look at 10,000. I don't want to come up with 10,000 companies in my head. I want to just find some that are already kind of going from the bottom left of the screen to the top right of the screen. The platform can do that for you. So we're going to do that again. We're going to show it again. Come up here to the Find tab and you click on Scans. Here, you can see several different scans. My favorite, of course, is the Outlook. I mentioned this before, and then I like to come to Bullish right here. Several different Bullish Outlook scans available for you. I almost always just keep it simple and go to the chart pattern rising channel. It's another way to say uptrend. So I'm going to click on this, and here we go. Uptrend. And, we're going to just grab them all right now. We could sift through them later and get rid of some of them that have bad fundamentals like CM, CSA, or HSBC. But most of them, as you can see, have green, or at least yellow on the fundamentals. And if they're looking like this, that's probably an ETF. This guy right here. So, you got the technicals, you got the insider score, but there's not really a valuation or fundamental score because they're not a company, they're ETFs. So just a heads up on that right there. But let's go ahead and just highlight all of them. And I can turn this into a watch list super quickly, right? I don't have to create a watch list and add them all in manually. I highlight them all and I come click the plus button on the folder here. I do that. And then I'm going to come to the bottom here. See, these are all the stocks that are highlighted. Come to the bottom here, and I'm going to put in this list name. And Let's keep it simple, right? Up, oops, if I can spell, uptrends. There you go. Uptrends, we're going to go ahead and create new. So now we've just created a new watch list. I can come to the watch tab and you can see uptrends. It's right in here. And I can, you know, I've showed this before. I can look at the difference, you know, performance, or, you know, maybe get rid of some of them that are red, or if you don't want to see the ETFs, that's fine too. But for today, we're going to go ahead and just come straight to the chart, and we're going to look at uptrends on the chart. We'll start right at the top. So here we go. This is the first one we're looking at. Obviously, you can see this thing has been uptrending, right? It was probably downtrending for a while there, a slight downtrend, kind of have a reversal. Now we got some higher highs and higher lows going on, right? So let's start throwing some lines on there. Let's look at this first potential line. Let's grab it right there. Look at that. Guys, that's pretty nice. We have 1, 2, and almost 3 touches. This guy, and earnings is behind us too. So this is Visa we're looking at right now. This is really close to being at a potential buy point. Okay, we're just going to hang out here for a second, right? So if we're looking at this Visa trade as a potential buy point, what could we do with this, right? We might be stocking this, you know, tomorrow or early next week. What kind of trades could we do? Honestly, if this is going to bounce, we could do step 1, step 2, step 3, step 4. So we're going to look at that. Let's build plans for steps 1 through 4 and see what that would look like. All right. Let's start off with step 1, simple stock trade. Okay. If we come down and we bounce down, and let's say we get a nice bounce off of this uptrending support line, and we buy right at 228. That's where the price is right now, but we don't want to pregame it, right? Because it's not gotten quite to support yet. It's not at that line quite yet. And we don't know that it's going to bounce off that line. It could continue down and maybe bounce off the 50-day or something else. And then we know we might have to adjust our line. Because what if what if this is actually the line, right? And what if it's going to come down and bounce off that line? That's great too. That's fine. But this is why we want to watch for the bounce before we go ahead and jump in. But for the sake of, building a good plan here, let's use 228. Let's say that's our entry price. So if that's going to be our entry price, then what is going to be our stop out? That's the first thing we want to consider, right? Stop out, we could have that be pretty tight, actually, if that actually bounces off of that line. Maybe our stop out is going to be 223, 224. Honestly, there's not necessarily a wrong answer to what that stop out is. You could go with this, strict, it's not a strict rule, but the rule of thumb of 8%. All right, pulling out the calculator. Here we go. 228 times 0.92, so 92% of that. That gives you an 8% stop out. We're looking at 209.76. 209.76 is going to be all the way down here. Now that's pretty far a stop out. We definitely don't want to go any farther. I don't think you need to go that far on this one. Just looking at the pattern, you don't need to go as far as an 8% stop out, right? And just real quick note, right? Because we said 209.76. And the OCD side of me kind of wants to just round up. And let's just call it 210. All right, little pro tip here. A lot of people do that. A lot of people put their stop outs at these nice round whole numbers. And the market makers know that. And they have the ability to, manipulate the price to an extent, just a little bit sometimes. And they might come and, clear out all those stop outs. So now everyone at 210 gets stopped out. But what if you had put yours at 209.88 or something like that, right? Just some kind of obscure number, you might still be safe. And then that stock's going your direction. So anyway, just a side note came to mind, wanted to throw that little pro tip in there. Try and stay away from the nice, beautiful round numbers. Like I'm not going to pick a stop out of 220. If I wanted to have my stop out there just below the 50-day, I might go like 219.41 or something like that. So anyway, stop outs 220, somewhere around 223, 224. Again, staying away from the whole numbers. That could be a good Stop out right there. What about profit target? You know, we want to maybe go ahead and be conservative here, right? I mean, I'm thinking somewhere in the 232.5 range. So it's not a big move, right? It's not far. 228 to 232, you know, that's a $4 move up, and we might be looking at, you know, a $3 or $4 stop out. So that risk to reward ratio may not really be to your liking, and that's okay. What about a step two? Let's go ahead and take a look at what this would look like if we did a step two. Which option would we choose? So we're looking at a bullish call option, right? We're going to come up here to the options tab. First thing I want to look at, liquidity. Beautiful. It's in the green. That's what I want to see, right? So that liquidity is in the green. That means that the tradability is good. That means the open interest is good. That means that, or, you know, the strike price is around the money, kind of at the money, close to there. You know, the open interest is good and the bid-ask spreads are fair, right? So, okay, step two call. We're going 3 to 4 months out. It's February, March, April, May. So May or June, somewhere in there. I don't have May. We do have June. So we'll choose June. Coming on down here. Let's go ahead. I like to always choose all the strike prices. Give me all of them. I don't need all of them, but I just want that power, right? To have all of them. All right. So, you know, we're usually going to go about 2 or 3 strike prices in the money. And that's going to bring us to, so, you know, we're looking somewhere in 60 to 70 delta. So I'm kind of liking this 215 strike price. If I were doing a step two call on this, I'm looking at this 215. That has about a 66, 67 delta. That's pretty nice. If you can actually click on here, if you actually want to see the intrinsic and extrinsic value. Oh man, it didn't do that right. Okay, let's try this. There we go. There you go. The intrinsic value, extrinsic value. If you don't want to do all the math to figure it out, it's right there for you. Okay, so that 215 open interest is good. Bid-ask spread, super nice. Visa's a big company, right, guys? Visa's a big company, lots of volume, lots of liquidity. So, you know, your bid-ask spread should be really good. It should be less than 5% like it is here. So that's nice. So that's what we'd be looking at if it was a step two call option. What about if we were going to do a step three trade, right? Now, I personally like to take my step three trades, and instead of doing them just 1 week out, I like to do a month. I like to sell more time and get that, get those, you know, the short strike, long strike farther away from the price. So that's what we're going to go ahead and do. Let's look at options again, and I want to look at about a month out. February 16th right now, March 17th is almost perfectly a month out. We're going to click March 17th. And I want to see where, there we go. So we're looking at the put side here. We're going to build a bull put spread. And, you know, I forgot to actually kind of plan this on the chart. If I'm going to do this, a bull put spread, I think I want to get my short strike at least below the 50-day. It'd be sweet if I could get it below, you know, the 100 and 200 simple here, maybe sell the 205. But I doubt we're going to get any money for that. We'll look at it, but I'm thinking maybe selling the 220. Could do the 215 as well. That wouldn't be wrong. But let's take a look now. Now we can go back. I always forget that part. I get ahead of myself. So, all right, let's look at that 205 real quick. 205 by 200. Whoops. One click too many. And you can see on the risk graph here, as I thought, we're not really going to get any money for that. Guys, does it make sense? Is it worth it to risk $484? You can see that right up here. $484 for the possibility of making 16? No, I don't think so. So we're going to get rid of that one. Let's look at that 220 by 215. Is it worth it to risk 417 for the possibility of making 83? That's a little bit better, right? Still have a you know, good probability in our favor, but there's actually some money in this trade that we could look at. So if we did that, if we did the 220 by 215, let's draw that on the chart. See what that trade would look like. I like to grab a rectangle here. And there we go, 220 by 215 going about a month out. That's right about there, kind of guesstimating it, but we just want to take a quick look and see. That's what our bull put spread would look like. That's decent, right? We got the 50-day moving average helping out as a defense line. We've got this, again, all this would be contingent on bouncing up off of this uptrending line and turn it into a trend line there, right? So, and if this were me, I like to have that short strike be my line in the sand, right? So if the short strike is breached, I'm out. That's my stop out. I'm reversing the trade. You know, my life with kid running around, all this kind of stuff, I don't want to have to worry about letting the long leg run, rolling out, all this kind of stuff. I want simple management. Simple management is good, especially when you're a newer trader. Just stick with simple management, right? So there's your bull put spread. What about, let's look at one more here, a step 4 debit spread. And then we're going to call it step 4 debit spread. If we're getting in right at 228, you know, step 4, that might potentially be one of the better options in this trade, right? I mean, for this chart of all the 4, that might be the best option because we don't need it to move very high for us to have really a nice move there. The one thing that might hurt us is they have the $5 wide strikes. So we could do a 225 by 230 or 230 by 235. We're going to take a look at this. Now for step 4 debit spread, you know, I'm looking at usually about a week or 2 of time. We'll go ahead and do 1 week of time here to keep it simple. And okay, they have $2.50 wide, so that's nice. That's actually good. That makes it a lot easier. I'm liking the 227.50 by 230. You can see open interest is good, and the bid ask spreads are very fair. I forgot to look at that on the bull put spread, but you've seen these spreads, especially on the monthlies. They're going to be pretty good. They're going to be excellent. This is a weekly expiration right now, and so it's a little bit thinner, but still good enough, right? 141, 146. I mean, that's less than 5% spread right there. That's excellent. And what is our risk to reward? We'd be risking $130 for the possibility of making 120. So that's really close to a 1-to-1. That's nice, right? I mean, you have to potentially making 100% on this trade right here. So that's fantastic. Let's go ahead and draw this guy out. So it's about a week out for expiration. Grab ourselves another box, and it was 227.5 by 230, and it's right around there. So, and for debit spread, I like to go ahead and make them green. Do we think that the stock, if it bounces up off of support there, do we think that it could move through both of those strikes by that time? That's not asking a lot from the stock. It really isn't, right? And you can make almost 100% ROI. That is the power of these debit spreads. Where would my stop out be? My stop out would be, I would keep it pretty tight. It'd be just below where the pivot is. So if it pivoted right there at about, let's call it 225.44, let's pretend that's where it was, I might have my stop out be 225.24, 23, something like that, right? And where would I take profit? I might put a good till cancel order on that for 50% of max profit. And then if it breaks the short strike, I'd want an alert on that short strike because I like to take whatever comes first, the short strike getting broken or 50% max. I never really have any interest in holding all the way through until expiration. Just don't. So I know we only looked at one ticker here of our whole list, right? But I just wanted to go ahead and just show the examples of, you know, the power of the different strategies out there. And one might have resonated more with you than one of the others. You know, you might not like that debit spread or the step 2 trade. Maybe this credit spread, just given all this room, really makes you happy. And that's perfectly fine. So it's all about matching the right strategy to your risk tolerance, to your personality as well. That is a big part of figuring out how to make trading work for you. All right, guys, let me go ahead and I'm going to drop a link in here for you guys. We're looking on this Saturday, a webinar of our 10 Gen Legacy. It's 10 Gen Legacy, Build Your Fortress. It's all about how to protect yourself, right? It's all about how to protect your wealth, create a legacy for your family. And, one of the coolest things about it is, when I was learning about the 10 Gen Legacy, you can have a family bank, and there's some very unique ways how you can save money because you guys would be the bank instead of actually going to a bank, right? So you get to go ahead and save that money and keep that for your family in the future. So go ahead and check out that link for a free webinar this Saturday. Hope to see you guys there. Thanks again for being on today, and we will see you guys next week.